Hi everyone, this is Marcus from Mirae Assets. In this video, we will go over the key trends we identified in the clean energy sector, in particular solar and wind industries in the first half of the year. First, we cover the solar sector developments. The global solar demand in the first half turned out to be stronger than anticipated, mainly supported by the European market after the energy crisis, as well as China, which is on the way to carbon neutrality. The US government's recent policy support on solar panels further boosts demand. For instance, the US announced a 2-year tariff suspensions for solar panels imports from 4 Southeast Asian countries, including Cambodia, Malaysia, Thailand, and Vietnam, all of which Chinese companies hold manufacturing capacity. This change ensures that US will have access to sufficient supply of modules to meet domestic electricity generation needs. As a result, solar installations for the whole year have lifted to 220 to 240 gigawatts, of which 80 to 90 gigawatts will come from China. Looking back at 2021, Chinese solar farm investors delayed most of their large-scale projects after module price elevated. Many were waiting for an end to the polysilicon shortage, at which point module prices were expected to revert to the range of 1.5 to 1.6 RMB per watt. But that failed to take place eventually. Many of these projects restarted this year when investors realized there was low chance of module price declines given strong market demand, coupled with decreasing domestic financing costs. Module prices are now considered acceptable at current levels around 1.95 to 2 RMB per watt in the China market, while polysilicon prices continuously climb to over RMB 260 per kilogram. Regarding profitability across the solar value chain, the dynamics of polysilicon in the upstream will largely remain tight until the end of the year, or maybe even next year if demand growth proves stronger than anticipated. However, all the top 5 polysilicon producers have added a significant number of new capacity in 2021 and 2022. Hence, leading polysilicon players have strong bargaining power against wafer makers who are severely oversupplied. The wafer end is rapidly heading to larger size, in which M10 wafers show great competitiveness. Despite raw material bottlenecks, utilizations remains at a relatively high level of over 80%. The profitability of solar cell and module products is improving in 2022 thanks to solid demand. What's also worth mentioning is the imminent technological innovation and differentiation of more powerful solar cells. In 2022, N-type solar cells are showing a blowout trend, especially with the larger scale mass production of leading integrated module companies such as the Jinko Solar, LONGi, Trina, Dongfang Rishen, etc. Jinko Solar has 16 gigawatt N-type TOPCon capacity, ramping up in the first quarter of 2022 and plans to build up another 16 gigawatt manufacturing line in the second half of the year. An increasing number of solar manufacturers are accelerating their mass production of TOPCon and HAT solar cells, for which the production cost has been greatly reduced through process improvement over the last 5 years. We expect to see N-type solar cells replacing PERC around the corner. We continue to witness healthy development in the wind industry in the first half of 2022. Firstly, there are continuous government support to develop renewable energy globally. In China, approval of new wind farm could be changed to a registration and recording process, meaning the approval process is likely to accelerate. This could be beneficial, especially for distributed wind in rural areas which tend to have a smaller scale. On the 1st of July this year, the China NDRC officially announced the 40th five-year plan for renewable energy. Key numerical targets are in line with earlier guidance. The NDRC guided total wind and solar power output to be doubled during the 40th five-year plan, and accumulated wind and solar capacities to reach more than 1,200 gigawatt by 2030. Progress in the mega-sized wind and solar power bases are on track. Several provinces are pushing hard on offshore wind installation plans, including Shandong, Fujian, Guangdong, and Guangxi. As China, we have in the US the Inflation Reduction Act, which help improve the economics and policy visibility of wind farm projects in the next 10 years, both onshore and offshore. In Germany, we got new installation targets to counter the well-discussed energy crisis. In the UK, Energy Security Strategy was released in April, which will accelerate the deployment of all renewable energy. For instance, offshore wind project target increases from 40 gigawatt to 50 gigawatt by 2030. Second, we see trends of project economics improving throughout the first half. In the second half of last year and first quarter this year, the wind industry was suffered from high commodity prices and shipping freight rates. We see many of these cost items are compressing the margins of the manufacturers along the supply chain. Starting second quarter 2022, we see trends of moderation in raw materials and shipping costs, which are great tailwinds to accelerate the wind installations both onshore and offshore. The energy crisis starting March this year also improved the relative economics of wind farm projects significantly. With strong policy support and decent project economics, we see year-to-July tendering volume for wind project in China has reached 61 gigawatts, which is a record high level historically. However, actual installations are yet to pick up, partly due to the high commodity prices, lockdown disruptions, and also design changes. With record high new orders growth year-to-date, we expect second half 2022 to be the period for actual installations to accelerate. To conclude, we see strong new order interest in the first half from positive policy support on renewables and better project economics. Into the rest of the year, we believe actual installations will pick up and a faster moderation in raw material and logistic costs to be great tailwind for the sector to grow.